What's next for markets?
I'm Michael Kantrowitz, Chief Investment Strategist at Piper Sandler, where I lead the portfolio strategy team ranked #1 on Wall Street in the All-America Institutional Investor Research Survey. This week, Stephen and I are joined by Piper Sandler's Senior Research Analyst, Alex Potter. Alex covers autos, mobility, and space, putting him at the center of some of the biggest changes happening across technology and manufacturing. In today's show, we discuss the renewed outlook for electric vehicles, the growing competitive threat from China, and how autonomy could reshape the economics of car ownership, and why companies like Tesla, Rivian, and SpaceX are approaching these markets so differently. It's a wide-ranging conversation about the future of transportation, AI, and the physical economy. Welcome back to the podcast, Alex. We had you on about a year ago, and since then, quite a bit has changed. Many of the EV tax credits have gone away. We've had, obviously, a shock to oil prices in 2026 that's perhaps brought some more demand for EV vehicles. SpaceX has IPO'd, which is a stock that you cover. So lots to talk about, but maybe we just start off kicking it off big picture, how you see things in your coverage space right now.
So yes, that is true. I would say that incrementally there is an uptick in demand for EVs as a result of higher gasoline prices. We've seen some evidence for that in the US. There's always been evidence for it in China and Europe. The ship has more or less sailed in those regions. So EV, and they call them range extended electric vehicles, which is basically an EV that has a small internal combustion engine on board to charge the battery. Those two drivetrains are pretty much the only thing that launches anymore in China, and increasingly that's the case in Europe as well. The US is the region that has been dragging its feet the most on EVs, and there was, for a period of time prior to the conflict in Iran, EVs were a 2-letter, 4-letter word that more or less prompted everybody in the industry to mothball their facilities, walk away from battery JVs, slow roll their product introductions, if not cancel them outright. And that left a small handful of EVs that were out in the actual market and available for sale to benefit from the higher gas prices. So Rivian reported last night, and they boosted their guidance for deliveries for this year, partially as a result of that. It's not like it's some sort of overwhelming tsunami of EV demand or something in the US, but generally more stability than we had certainly prior to the conflict. The other thing too, I think, like you ask about like my sector, the things that are happening in my sector, and this is obviously separate from SpaceX and the space stocks that we launched on, but in autos is you have the Chinese basically just eating the world. And that's another thing that makes the US different. Obviously, we live in a walled garden here where there's no real threat from the Chinese, but that's absolutely not the case pretty much anywhere else in the world. And as a result, the market share for these Chinese OEMs, there's probably 3 to 6 Chinese companies. Every single month, their market share goes up, and it's driving a real crisis in Europe. It's driving a crisis amongst multi-brand sort of global automakers that have, meaningful businesses in Latin America or the Middle East or Southeast Asia. So that's definitely something that's also impacting my industry. Again, General Motors, Ford, companies that are more or less SUV specialists or pickup truck specialists, they're happy. Things are good for them because this China threat doesn't really impact demand for full-size pickups in any way in the US. So they're making tons of money.
Now, do you see any risk to that in ahead of the future? Obviously, it's a political story as much as it's an economic story.
Mm-hmm.
And so is there any risk from that, from the midterms or perhaps at the next presidential election? Or you think it's something that's pretty broadly supported to protect our auto industry still, which has obviously been the story for many years?
I think that this goes beyond the auto industry. My personal view is that the Chinese are doing now to autos what they've more or less done to every other manufacturing industry. So it's only now that we're waking up and caring this much about it. But I would challenge you to look around the room that you're in right now and try to find anything that wasn't built in China. The only issue is what we're realizing now collectively as the West, especially in the US, is that our supply chains, autos and otherwise, are completely beholden to Chinese manufacturing, and we no longer control the means of production. And that makes people nervous. Autos are a big deal because they employ a lot of people and all that. But I think that is likely, in my opinion, ought to be a bipartisan issue. Reclaiming control of supply chains is important. I think it will span administrations. So I do think long term, it's difficult to fight back. It's like there's a dam and there's all this pressure behind the dam, and these cheap Chinese everything are behind the dam and they're looking for holes to poke through, and inevitably the pressure will probably be overwhelming. I know Ford Motor Company, Jim Farley was saying that he expects within 10 years there'll be Chinese cars in the US. But I don't know. I think attempting to decouple, however painful that might be, is probably the right decision. So we'll see. But the United States is really the only country with any sort of real gusto that's actually attempting to pull this off. Everywhere else, the Chinese are just, it's a complete invasion of the auto market. And it's shocking. There's 3 Chinese car companies who, like when I last talked to you, or certainly 2 years ago, they were a complete non-factor in Europe. And by the end of this year, it'll probably be just those 3 companies alone will probably be 1 out of every 10 cars sold in Europe. And it's just every month, literally just up and to the right, up and to the right, up and to the right, like 50 basis points, 75 basis points, 100 basis points. And all of that share is coming out of Volkswagen's pocket or Peugeot or Citroën or any of these Fiat, right? These are 100+ year history companies with brands that are like, my wife is German, right? And her personal identity to a certain extent is tied up with these German engineering and it's just, nope, you're all dead. 100,000 of you are fired. It's crazy how quickly it's unfolding. So something's got to happen.
Can it be stopped? A lot of these Chinese autos and the US EVs are very tech forward. Can the legacy automakers and the US hold back that tidal wave? Is it even possible?
So it's interesting because it's not really a Chinese versus Western thing. It is, obviously, but there's something more fundamental underlying why the Chinese have an advantage. Partially, it's cheap labor, just like really extremely hardworking labor that is also lower price on an hourly basis. But then there's subsidized utilities and free land and all of these other things that make China a formidable like manufacturing powerhouse. But the other thing that the Chinese are wielding is a completely different business model, and that business model looks a lot more like Tesla, right? It's basically Tesla was the true sort of innovator in this space that rethought the way automotive supply chains ought to function. And Rivian does this as well, and the Chinese do it as well. We can talk about specifically what it is, but that is the thing that's hard for legacy automakers to replicate. You're obviously never going to replicate the Chinese cost structure because of some of the issues we were talking about there. But some of the things that the Chinese do better have nothing to do with cost. They have everything to do with speed, with being nimble, with being in control of your own destiny as a result of vertical integration and in-house electronics, custom chip designs, in-house software, mastering all of the software domains of the vehicle and internalizing that within the company rather than relying on the supply base, and launching a new product every 12 months instead of every 6 years, right? That's not because you have cheap labor. That's because you have a different business model, and that business model mimics what Tesla does. That's a super hard thing for General Motors and Ford to replicate. Luckily, in the United States, these companies aren't feeling that pressure either from Tesla or from the Chinese, because Tesla is sort of its own thing, right? If you're in the market for buying a Ford Expedition or whatever, like a Cadillac Escalade, you're not a potential Model Y buyer in the first place. And since there are no cars with that form factor that are built using that business model in the United States that are coming faster and coming cheaper, you just buy your Expedition, right? And you're never going to have to worry about any other company or any other product competing with you using a superior business model, because Tesla's just off doing its own thing and they're the only company. So Rivian, though, and other companies, the things like, even if we had an impenetrable anti-China wall that kept the Chinese out forever, eventually you will have American companies, Western companies like Rivian, who study this business model and say, you know what, this is a better way to build cars. And then inevitably they do come out with, call it three-row SUVs or things. They start competing in segments where Tesla's sort of MIA. And then they do start winning share slowly but surely away from the big three.
Is Rivian's R1T a threat to the Ford pickup?
No,
It's just too small right now. Or do you think it's just a different buyer as well? Just because
it's a different buyer. The full-size pickup truck owner in the United States is a very specific kind of animal. And Ford knows that customer deeply. A lot of them are small business owners. A lot of them are weekend warrior types. They've got a landscaping business on Monday to Friday, but then they unhook the lawnmowers and put jet skis on and go to the lake on the weekend, and they tow junk. And a lot of times those vehicles are meant to do things that aren't just shuttle kids to soccer. They're actually supposed to do jobs.
Yeah.
And they have dual purposes. And Ford had their entire business that they call it Ford Pro, right? It's incredibly lucrative because they just crush this segment. The service aspect of it, the dealers, understanding all of the different niche categories. What sort of upfitting does an electrician need versus a utility fleet versus a municipal fleet? Ford had their entire DNA of their entire company is set up in a way to service that light duty fleet owner. And it's just really hard for somebody like Rivian, who's not built in that way, right? Yeah. They're like, this is an awesome electric truck, right? And people are like, yeah, it is for sure. But it's not really going at the core of the U.S. pickup market. And I don't think it was really designed to. It's really hard to dislodge Ford from that segment.
A lot of history there.
Yeah.
Before this podcast, you and I and Stephen were talking about China, and you mentioned you're heading over to China and going to be spending much of the month of September there. What are you looking to incrementally learn on that trip?
The reason Tesla and Rivian vertically integrate, I know that you asked about China, and I'm starting with Tesla and Rivian again, but it's all related. Why vertically integrate? Is it just about coming out with cars more quickly, more cheaply, at your own pace? That's a big reason for it, yes. But the real end game, certainly if you're thinking about it from the standpoint of Elon Musk, is you use these physical supply chains, own the physical underlying product, embrace asset intensity, build the electronics up using your own IP, your own engineers. If necessary, you design and build your own semiconductors, do whatever it takes, then vertically integrate all the way to the end customer. And again, why are you doing all this? Because you want to deliver service to that end customer while piggybacking on all of this hardware infrastructure that you've built without asking anybody else's permission, right? There's not a bunch of other software and ECUs and printed circuit boards and garbage from a whole Frankenmonster full of suppliers in your car. That's the way that General Motors cars and Volkswagen's cars and everybody else's cars are built. It's just Tesla. And if you do that, then you can deliver things like self-driving functionality. You can build a humanoid robot that will make you an omelet, right? You can do whatever you want so long as you internalize all of that know-how in-house. Rivian doing the same, right? So you mentioned, Michael, you've got a R1S, and that predates Rivian's latest sort of autonomy hardware, but they're going down the same path, right? They had their own AI day, their own custom silicon, their own end-to-end neural net training. And why? It's because they're trying to make your Rivian on road trips drive itself so that you can watch Netflix on your way to the lake instead of having to sit there driving. And so that's a huge value add, right? And that's the whole point, is you want to get people subscribing to those things. So the Chinese, like I mentioned, they're not dogmatic about the way they think supply chains ought to function. If somebody like Tesla shows the path forward, they will copy it. So on this trip, I go to China and try to figure out how far down that path they are. We'll be going to at least 2 different robotaxi companies taking autonomous rides with clients. We're going to go visit Xiaomi, which is a ridiculous, like that company's amazing. Basically the Apple of China, if Apple didn't give up on its electric car So it's like you go into an Apple store and there's phones and there's iPads and things, and then there's also a car. So in Xiaomi's case, that's what they've done. They're making humanoid robots as well. We're going to visit Tesla's Gigafactory in China, which is the first time I've ever done that. It's the last sort of major Tesla facility that I've never been to. So yeah, it's going to be amazing. I'm actually really very much looking forward. We're gonna meet with a couple humanoid robot specialists like the Chinese. You've probably seen whatever Chinese robots doing kung fu with each other and boxing rings.
Playing soccer.
Yeah, exactly.
I don't know if they call it soccer or football in China.
They call it zuqiu.
So you brought up full self-driving and the push in China. How does autonomy on the road or these enhancements you're seeing that Tesla have and Rivian's coming out with and the Chinese automaker change the landscape in the future for the auto industry?
I think it changes it really fundamentally. The issue is, though, it's still academic, right? It's still sci-fi. The auto industry is still functioning how it always functioned, right? There's inventory in the channel, and there's market share, and there's new products, and there's product refreshes, and goes through these cycles, and it's not especially interesting or dynamic. It's been functioning this way for decades, and you can sit there and write research reports or listen to a podcast or something and think, oh my God, your car sits idle in your driveway for 95% of the time. Shouldn't it be out there generating revenue for you and changing the world? And everybody's like, yeah, but people have been talking about that for a decade now. And here we are a decade later, and the auto cycle is still functioning the way it always has. And so it's like, you can understand why there's some fatigue with this, especially because, like, I remember we covered General Motors a decade ago or thereabouts, and Cruise, which was meant to be their self-driving subsidiary, what it was their wholly owned self-driving, the Silicon Valley stuff. It was 60-70% of General Motors market cap. And now it's $0.00. Like, it's more or less like they basically shuttered the whole thing and took some of the engineers and they have them working on dumbed down autonomy now. Like, it's nothing like what it once was. And so after people go through that, they're like, all right, this stuff is all smoke and mirrors. But it's not. Like, it really is coming. It's just that the methodology used for solving it, again, I mean, Tesla's doing this fundamentally differently than everybody else. They do it differently than Cruise. They did it differently than Waymo and differently than most of the Chinese. Elon Musk has no problem being the only guy in the room doing something one way if he thinks it's the right way, which over time it generally is. And so now that more and more people are coming around to Tesla's methodology for solving this, including the Chinese, I do think that there is putting timelines on this is fraught for all the reasons that I just mentioned. But I do think that within a quasi-investable time horizon, the auto cycle will function differently, that we won't need as many cars. And 2-car households can become 1-car households. And the 1 car that you have, it needs to be full self-driving so that you can be watching Netflix on road trips. But the other car that you have is for running errands and things. And maybe you don't want that car. You just hail it or have it go pick up the Chipotle for you or whatever. I do think that level of disruption is coming, but it needs to be, and if you have an FSD car, right? That's the sort of thing that you can tell if you're driving it or using it every day, how very close we are, or at least Tesla is, to truly taking your eyes off the road. I have to catch myself to not sit there responding to emails or whatever, because you don't have to pay attention. I took a multi-day road trip, I was telling you earlier, across the country, multiple states, thousands of miles of driving over spring break, and didn't touch the steering wheel once. So eventually, after 18 hours of doing that, you're like, why am I just staring at the road? Why am I not texting somebody or doing something to keep my mind occupied because I'm just sitting here? Yeah, once we get that time back, once the consumers, general, everyday people realize that technology is real, I think it's going to have a profound impact on the auto supply chain. But as of now, it doesn't, because people don't think it's real, which I understand.
It seems an inevitability, though, with ride sharing and the popularity of that. And that's probably one of the first places you're going to start seeing.
Yeah.
You talk to people that go visit these cities that have the Waymos and the robotaxis, and they come back, how was your trip? That's the first thing they talk about.
Yeah.
And that seems like a tidal wave that is inevitable. Once you have seen it, you want it.
Yeah, I agree. I think that one of the main benefits of Tesla having its own robotaxi network is exactly that, is it's more like an experiential thing. I do ultimately at one point expect it to be a high margin revenue generating business where they're selling rides, right? They build a car, they capitalize the car, then they monetize that asset by selling rides, and they do it over however many years till the car is fully depreciated and they scrap it. That's a business. But I think the most near-term financially relevant thing that could possibly happen is if you go to Austin, for instance, or go to Houston or any place that has a robotaxi network, and a Model Y with nobody in it picks you up and takes you to whatever, get brisket somewhere, then you realize that Model Y is no different than the Model Y you can buy. I went out when the new hardware came out for fourth generation hardware, which is what you need to have full self-driving capability on a Model Y. My previous Tesla was too old. It didn't have that generation. So I bought a used Model Y with 8,000 miles or 7,000 miles on the odometer that had fourth generation hardware. I got it for $40,000, 40, something like that, 340 miles of range or whatever it is, full self-driving capability. You cannot, the value that you get for buying that car is just ridiculous. The average price of a new car, regardless of drivetrain in the US, is $50,000. But I don't think people realize that, right? In their mind, Tesla's this own thing. I'm not a Tesla buyer. I could never envision myself being a Tesla buyer. But and I do think Tesla could probably do a better job of telling that story. But again, if you go to Austin and then you sit there thinking, there's no difference between this Model Y and the Model Y that I could have in my own driveway, and I could be watching Netflix and streaming. Like, why am I not paying $40,000 for that car?
All right. So next time you talk to Elon Musk, tell him I have an idea for marketing robotaxis in Austin. You can have your brisket and eat it too.
There you go. Yeah.
The whole Midwest. There you go. Marketing.
Okay. I'll use my slot on the earnings call next quarter.
Appreciate that. Let's talk about the flip side of that real quick. In your coverage universe, what's most at risk if autonomous vehicles do work? Is it the traditional automakers, or even thinking beyond your coverage? Is it the insurers, the dealerships, repair shops?
Yeah. Insurance is a super interesting topic. My next insurance, the next time I get insurance, I'm going to use Tesla insurance. This is something that's super interesting, actually. My family has owned only Teslas since 2016. And Tesla started doing in-house insurance many years ago. I think it was 2018, 2019 when they first came out with it. It wasn't a nationwide thing. They only did it in a handful of states. I live in Minnesota, and we've had Tesla insurance, I think, available since 2022. But I consider myself relatively well educated on this company. I didn't even know that we had it in Minnesota. Underwriting car insurance policies is actually pretty hard, and doing it well is difficult. And Tesla didn't do it well. And so it really didn't make a lot of sense for them to be out there pitching their in-house insurance. It's like the more policies they sold, the more money they lost because they made such a mess of the whole thing. The whole issue, the whole reason why Tesla wanted to do insurance in the first place was, number one, it was difficult to insure EVs in the early days because it was an unknown thing and there wasn't a lot of actuarial data, and Tesla wanted to take that off the table for consumers who are.
Yeah.
But the biggest thing is full self-driving, right? If you can mathematically prove that your car gets in car accidents 1/10 or 100th as often as any other car on the road, and you've got 7 cameras of high-def video proving in every instance that any accident was not caused by you, then obviously the technology is the important gating factor. You need to be able to say that with confidence, right? You need to be able to say that I actually believe in this technology. And that's the thing that changed me as a Minnesota resident with a Tesla vehicle. Now I know that Tesla's selling insurance. Why do I know? Because they keep sending me emails saying, look, whatever you're paying in insurance, use full self-driving. If you use full self-driving, cut your policy in half. We'll underwrite it. And they can do that with confidence because not doing it would be leaving money on the table. It's basically free money. All you have to do is bend down and pick it up. But they can only do that if they feel confident in the technology. And the thing that has changed over the last 6-12 months or whatever is apparently they feel comfortable with it. Otherwise, they would not be marketing it.
That's a huge add to the point you made earlier about the value proposition,
Yeah.
the carry cost of a car or a house for that matter, right? It's all in the maintenance and the upkeep. And that's actually, I didn't know that. Steve, did you know that?
I've been getting emails about it.
Yeah. It's crazy. And that is one of the things too that the pushback that you sometimes get on full self-driving is that a full self-driving subscription costs $99 a month, right? So it's basically $100 a month. That's $1,200 a year. And when people hear that, they're like, I'm living my life perfectly happily without paying an incremental $1,200. Thank you very much. Why do I need a gimmicky car that drives for me? Be like, how much do you spend in car insurance? And eventually then, how much do you spend on parking your car? What if you didn't need to, right? The car just drops you off. What if you didn't need to own the car in the first place? You didn't need to register the car? The economics on the insurance alone, I'd pay $99 a month to be able to watch Netflix on road trips if that was it. Maybe I'm not the average individual. So I don't know. Eventually, it goes back. I think it was Steve Ballmer or whoever it was at Microsoft who, back when the iPhone first came out, he was like, you see what they're charging $1,000 or whatever for that stupid phone. What we've got a $200 phone that takes photos and it sends text. What's the big deal? And you're like, oh man, that guy, nobody understood. And it's a natural way for most people to respond. I can put myself in the shoes of him back then too and be like, $1,000? Like, why? That's completely nuts. There's no version of reality in which I ever pay that to make a phone call. Whereas now I'm like, oh, actually my entire life is different because of this and I can't envision it without it. That's the same sort of disruption that an actually self-driving car has on every aspect of your life, including the amount that you're paying for insurance and the number of cars that we need to sell globally and all kinds of things. Infrastructure, parking, utility grids, the implications are super broad. So it's almost difficult to articulate all the ways of who's at risk from disruption. It's really broad, but I do think it will impact insurance. I think it will impact incumbent automakers, suppliers, dealers. It's very broad.
So we've been very technology focused in this episode. So I'd be remiss if I didn't bring up your coverage of SpaceX and robotics and your thoughts beyond auto.
Yeah. So it's interesting, at least when you listen to the way that Elon Musk frames his view of the world. I mentioned some of the core sort of pillars of his worldview: vertical integration, upstream and downstream, all the way upstream if necessary, all the way downstream, have a direct to consumer relationship. But he thinks of things in sort of society-wide context. And if you apply that reasoning not just to one individual supply chain, just like making a car, and broaden it out to more or less everything, I think that's literally his ambition, right? He has the SpaceX stuff. Space is in the name, but it's not a space company per se. It's basically an artificial intelligence company with manufacturing. It's the same thing, right? Like what we were talking about earlier. I think the tendency in the West has, over the last 30 plus years, since China ascended to the WTO and became the quasi factory for the world manufacturing things with no expectation of ROI. Prior to that, we actually built things in the West. And what Elon is trying to get back to is vertically integrated supply chains. You embrace asset intensity, vertically integrate, and then deliver the service piggybacking off of the hardware that you've built. And so now he's extending that to space, to satellites, and ultimately to data centers, and delivering a service piggybacking off of all of the hard assets that he's built. Rockets obviously are the enabling technology. Obviously, everybody talks a lot about next for data centers, and there's all of this demand for power, and how are we ever going to build all the data centers and generate all the tokens we need for AI? If you apply this methodology, vertically integrate, be in control of your own destiny, the sun never sets in space, let's build rockets, put satellites on the rockets that are basically data centers, launch the rockets into space, then put those data centers up there. You can generate solar panels, I think, are something like 5 times more. They generate 5 times more power in space than they do on the ground, because the sun never sets and there's no atmosphere and there's no weather, and the orientation can be optimal, like perpendicular to the sun at all times. and it's very cold in space, so you can cool the batteries or cool the electronics hardware using radiation. The economics all pencil out, and then everybody says he's crazy. Obviously, it has been the case ever since he's ever started doing anything, but it doesn't bother him. He just continues doing it and doing it. And then one day you wake up, just like one day you wake up and the car self-drives itself because of this methodology. One day putting data centers in space is by far the cheapest thing to do. And there's physical robots roaming the streets, interacting with you the same way I'm interacting with you now, using LLMs that he's built in Grok, which is basically the large language model that you can talk to in your Tesla. And then there's the physical real world AI that they're developing with robotaxis, which they will then apply to Optimus robots. All of that can be trained in data centers in space. Like, it's this massive interconnected ecosystem with sort of ridiculous ambition that impacts all of humanity. So it's like, I'm supposed to be an autos analyst, but it's fun covering these companies because it forces you to start thinking about things the way Elon does, which is a crazy world to live in.
So let me ask you, Alex, just knowing you for the last few years and just having you on our podcast a year ago and today, it sounds like you're a pretty big fan of Elon Musk. You're a self-proclaimed long-term bull on Tesla, and you currently have an overweight on it. Yet SpaceX, correct me if I'm wrong, you currently have a neutral rating. So what's different there, at least in the near term? Is it more about valuation, or what do you need to see to recommend that stock in a more bullish way?
It's actually not about valuation. I'm actually comfortable with long-term kind of terminal value. If I wasn't, then there's no way I would have had an overweight on Tesla. Like, we've been overweight on Tesla for a decade.
Yeah.
And you're right. Like, obviously, you can look back in hindsight and be like, there are periods of time when I should have changed that rating, and then periods of time when I should have changed the rating back. And I think if you zoom out further, which obviously not all investors have the luxury of being able to do that, but I'm convinced that 10 years, 20 years from now, if I look back and be like, I was the guy who was overweight on Tesla for 30 years, think back to what the world was like before Tesla, I'd be happy to be able to say that, because all of that same logic is true for SpaceX, right? Like, there's really no, and I don't want to say that I'm just like a unapologetic Elon fan in every single possible way. Like, there are definitely things that the way that he composes himself, the way that he behaves, and I wouldn't behave that way. I want to qualify it a little bit, but in general, I think that the sort of first principles reasoning and his approach will likely work, for better or for worse. I think it's going to work with SpaceX just like it will work with Tesla. The issue that on the stock is less about that. It's something like 6% of the total outstanding shares are float. There's a ton of private pre-IPO shares that are locked up, and people who have been long tenured SpaceX employees or early investors in pre-IPO rounds or whatever, they're sitting on this massive paper gain. Basically, a lot of people, overnight millionaires, but they can't liquidate it. And so you can imagine that person on the day the IPO happens, if you want to lock in the amount of money that you believe you're owed, the first thing you do is short SpaceX. Yeah. Right? Because if it goes down, you don't lose any money. And if it goes up, you don't lose any money. That's just that's how much money you have. And now you can plan on it, because 3 months from now or whatever, when your lockup expiration comes, then you can monetize it for the first time in 15 years, which you've been waiting 15 years to do. That has nothing to do with the prospects for the company's long-term fundamentals or anything like that. So I think that until all of that noise is out of the stock.
Let's talk about the timing on that. And also, as obviously you're well aware of, SpaceX did not get included in the S&P 500. Sounds like that could be up to a year before that is included. That was a big debate during the pre-IPO period. The Qs, I believe, right? SpaceX is in the Qs and a couple other ETFs, but not in the S&P 500, which, to your point, only furthers the reason that you're a little concerned in the near term. When do we get to a point where you kind of go over the top of the mountain and you think you've seen most people monetize?
Yeah, we have this waterfall chart, right? So the x-axis is time, And then the y-axis is percent of the outstanding shares that are available and publicly traded in float. And there's these stair steps that happen. There's a couple different things that unlock. There's earnings calls and there's this, that, or the other. It's like however many days after the earnings call, then a certain chunk comes unlocked. And so it's not all at once. It's definitely these stair steps over the next year or 3 quarters, 9 months or 12 months or something like that. And so it's this kind of steady bleed. And then you're right, like the index inclusion stuff is another thing that's like a weird thing that, and I know I should be talking to Jackson. We have a really good index team here and he does incredible work. And I should pull out his stuff and try to understand when will it be included in the S&P and why and the different milestones. I know that there are certain, at least historically, there was certain things you had to do in order to be included, right? Like you had to be like GAAP profitable for the trailing 4 quarters or all these different things. And because it came out at such a ginormous valuation and all that, like I think that people were angling these different index funds for inclusion to make an exception because this is such a one-off. And I think they were trying to do that with the S&P 500 as well, get them to waive whatever normal requirements they have and put them directly in the index from day 1 or from day 10 or whatever it happened. But that didn't happen. So yeah, I imagine it's a year. I don't know. I need to look. The last big unlock is Elon Musk's own, which he's not going to sell. So like you can look at it and be like, there's this massive tranche coming available in a year or whatever, but that's more or less going to stay quote unquote locked up forever, at least in theory, unless he finds something else that he wants to buy. I can't imagine what that would be at this point, but you never know. Oh yeah, it does pain me a little bit though to be anything other than constructive because there are so many things, and I do at some point probably think that both of these companies become one entity.
That was my next question I was going to ask you because I'm sure you're getting that question quite a bit.
Yeah, it really a lot. And that's another big overhang, right?
Is there a milestone or catalyst that you think would trigger that? Or is there anything specific you're looking for?
Not really.
Or just Elon wakes up one day and he's like, yeah, it'd be easier if this was one company.
I think he's been waking up every morning for the last however many years thinking that. I think, and he wants, the way that it would work is SpaceX would have to absorb Tesla, not the other way around, because you really want, or what he wants is quasi-dictatorial control, which he has at SpaceX and does not have at Tesla. And he wants that ownership structure with sort of the 10x voting shares, Class B shares, which are at this point has become common practice amongst these big, a lot of the Mag 7 type companies all have that. And so it's actually more Tesla that's atypical in the sense that it's one vote, one share kind of a thing. Elon has a strong preference for the SpaceX ownership structure, as you can imagine. So SpaceX would presumably be acquiring Tesla or something, but how the deal would ultimately be structured, I don't know. It's another overhang on SpaceX. It's sort of, geez, I agree with all these things and I'm excited to do whatever. You can definitely imagine investors saying things like that, but then at the same time being like, but what about this acquisition? I don't know that I necessarily want to, is it going to be dilutive? How dilutive? Like how big of an upside are Tesla shareholders going to want? What's the ratio, like the share exchange ratio? What's the relative valuation of one stock going to be versus the other on the day when this deal is ultimately proposed? And I don't know how to fill in any of those blanks. So it's just one more thing that keeps you, every time you want to talk about projecting the terminal value and trying to project out and distill it all down into something like a DCF. Before you even get to that point, that the conversation is torpedoed by all of these other non-fundamental governance related or index inclusion or things like that. It's like, so we're neutral just because of all that.
Thank you, Alex. Really interesting conversation. It's going to be fun to see how all these themes we talked about transpire. And
it'll be interesting one way or another. Fun. I don't know. We'll see.
Can't wait to have you back again.
Sounds good, guys. Thanks.
All right.
We hope you enjoyed today's episode of What's Next for Markets. You can subscribe to the show on Apple, Spotify, YouTube, or wherever you get your podcasts. Be sure to follow Michael on X at Michael Cantro. If you like the show, please let us know by leaving a positive review. The preceding commentary is not financial advice. You should always seek appropriate financial advice from a professional financial advisor in your state. You should not consider this as a substitute for these services. Piper Sandler does and seeks to do business with companies covered in its research commentary or coverage. As a result, investors should be aware that the firm may have a conflict of interest that could affect the objectivity of this commentary. Investors should consider this commentary as only a single factor in making their investment decisions. For full disclosure information, visit www.pipersandler.com/researchdisclosures.